Welcome back to US Updates Hub. I am truly glad you are here today because what I am about to share with you is absolutely critical. And I say that with complete sincerity. If you or someone close to you receives Social Security benefits, or if you are mapping out your retirement in the coming months or years, the changes currently unfolding at the Social Security Administration could directly impact your monthly income, your ability to access services, and your long-term financial stability. So please remain with me from start to finish because by the time we are through, you will have a clear, honest understanding of what is taking place, what it means for you personally, and most importantly, what you can do right now to safeguard yourself and your family. As of today, April 30th, 2026, the Social Security Administration, the agency that more than 70 million Americans rely on for retirement, disability, and survivor payments, is weathering one of the most turbulent and consequential chapters in its nearly 90-year existence. We are discussing significant benefit modifications, sweeping administrative reorganization, workforce reductions on a magnitude not witnessed in decades, field office disruptions, new rules for accessing services, and a landmark piece of legislation that has already returned billions of dollars to retirees who had money taken from them for years. This is a major story, and you deserve to comprehend every single layer of it. Let us begin with the number that matters most to millions of people who are already receiving their monthly checks. The Social Security Administration confirmed that effective January 2026, all beneficiaries received a 2.8% cost of living adjustment, commonly referred to as the COLA. According to the SSA's own published COLA fact sheet, this increase was determined based on the rise in the Consumer Price Index for urban wage earners and clerical workers, the CPIW, from the third quarter of 2024 through the third quarter of 2025. That is the standard methodology applied every single year, and it produced a 2026 COLA that is slightly above last year's 2.5% adjustment. Now, what does that actually amount to in real dollars? According to SSA estimates, the average retired worker is now receiving approximately $2,071 per month, compared to $2,015 in 2025. That represents an increase of roughly $56 a month. For married couples who are both collecting benefits, the combined average climbed from $3,120 to approximately $3,208, an increase of about $88 a month. These are averages, and your individual situation will differ based on your earnings history and when you began claiming. But the COLA increase is automatic. You do not need to take a single action to receive it. It has already been applied to your check. Here's something important I want you to hear, though, because a lot of people feel puzzled about this. While your gross Social Security check went up, many of you may have noticed that your net take-home amount did not rise by the full $56. Why? Because Medicare Part B premiums also increased in 2026. The Centers for Medicare and Medicaid Services announced that the standard monthly Part B premium rose from $185 to $202. Since the SSA automatically deducts Medicare Part B premiums from most beneficiaries' Social Security checks, that $17 increase in premiums consumed a portion of the COLA boost for Medicare recipients. This is a well-documented phenomenon. Analysts at AARP have written extensively about this COLA and premium offset dynamic, and it is completely lawful and expected. It is not a mistake on your statement. It is how the system is structured. Now let us address something that affects you if you are still employed while collecting Social Security before your full retirement age. The SSA maintains what is called the Retirement Earnings Test, and the limits on that test have been updated for 2026. If you have not yet reached your full retirement age and you are working, the agency will withhold $1 from your benefits for every $2 you earn above $24,280 this year. That threshold increased from $23,400 in 2025, so you have a bit more flexibility. If you are in the year that you will reach your full retirement age, there is a separate, more generous threshold of $160, above which the SSA withholds $1 for every $3 earned. And once you reach your full retirement age entirely, there is no earnings limit whatsoever. You can earn as much as you want with no reduction. The encouraging news is that any benefits withheld under the earnings test are not permanently forfeited. The SSA eventually recalculates and increases your monthly payment to account for what was withheld. But knowing these thresholds in advance helps you plan your working hours and income strategically. Speaking of full retirement age, 2026 is a historically noteworthy year. For anyone born in 1960 or later, your full retirement age is 67. And starting in November 2026, that threshold officially reaches 67 for this entire group, completing a 42-year gradual transition that began with the Social Security Amendments of 1983. That legislation was designed to reflect increasing life expectancies and to reduce long-term strain on the program's trust fund. If you were born in 1960 and are planning to file for benefits this year, understanding your specific full retirement age is essential because claiming before that milestone results in permanently reduced monthly payments while delaying past it all the way up to age 70 earns you delayed retirement credits that increase your eventual benefit. The SSA website has a full retirement age chart at ssa.gov that you should review directly for your specific birth year. Now I want to spend meaningful time on something that has not been covered as broadly as it deserves. The Social Security Fairness Act. This is arguably the single largest legislative change to the Social Security program in a generation, and it directly affects millions of retirees who served in public roles. Teachers, police officers, firefighters, federal employees under the old civil service retirement system, and state and local government workers whose positions did not include Social Security payroll tax withholding. For decades, two provisions, the windfall elimination provision, known as the WEP, and the government pension offset, known as the GPO, reduced or in some cases completely wiped out Social Security benefits for these individuals, even when they had earned benefits through other covered employment. President Biden signed the Social Security Fairness Act into law on January 5, 2025, officially repealing both the WEP and the GPO retroactively effective January 2024. That means December 2023 was the final month those reductions applied. According to the SSA's own implementation page, the agency moved swiftly, beginning retroactive payments in February 2025 and adjusting monthly benefit amounts starting in April 2025. By July 7, 2025, the SSA confirmed it had sent over 3.1 million payments, totaling $17 billion to eligible beneficiaries, 5 months ahead of their original timeline. That is a remarkable accomplishment and real money back in real people's pockets. But here's where it gets complicated, and I want to be very straightforward with you about this. Not every affected person received the same retroactive period. The SSA divided affected individuals into groups. Those who were already collecting benefits reduced by WEP or GPO generally received a full retroactive payment back to January 2024. But those who had never applied for benefits because, under the old rules, they were told their benefit would be reduced to zero or near zero, so they simply never filed, only received retroactive payments going back 6 months from the date they finally applied. This has generated real frustration and active legislative pushback. A bipartisan group of senators, including Susan Collins, Bill Cassidy, John Cornyn, and John Fetterman, has been pressing the SSA to provide the full retroactivity back to January 2024 for all eligible applicants regardless of when they filed. As of early 2026, the SSA maintained that the Fairness Act did not change existing retroactivity rules, and the debate is ongoing. If you are a retired public employee, a teacher, a firefighter, a federal worker under CSRS, a state or local government employee, and you have not yet contacted the SSA about your potential eligibility, under the Social Security Fairness Act, I want you to stop what you are doing after this video and go to ssa.gov. Look for the Social Security Fairness Act page. Call the SSA at 1-800-7790-1213 or schedule an in-person appointment at your local field office. Do not assume someone else is handling this for you. Some affected individuals had their benefits automatically adjusted. Others, particularly those who never applied, must proactively file. The amount of money at stake can be substantial, and in some cases we are talking about hundreds of dollars a month, permanently added to a check plus a lump sum retroactive payment. Now I have to be very direct with you about something else. Something affecting not what is in your Social Security check,
Mhm.
but how you actually access Social Security services. This is where the picture becomes genuinely difficult for many Americans. And I want to discuss it in a factual, balanced, and measured way because the information is important regardless of anyone's political views. Over the past year, the Social Security Administration has undergone significant restructuring tied to workforce reductions initiated by the Department of Government Efficiency, an executive branch initiative. According to data from the Office of Personnel Management, the SSA lost approximately 7,500 employees, roughly 13% of its total workforce, between January 2025 and January 2026. This came at a time when the SSA was already at staffing levels not seen in 50 years, while simultaneously serving the highest number of beneficiaries in its history. Approximately 69 million people every single month. Customer service staff who handled phone calls and field office walk-ins were particularly affected. As of late April 2026, reporting from Rolling Out, Newsweek, and other credible outlets confirmed that multiple SSA field offices across more than a dozen states are either temporarily closed, operating with limited hours, or restricting in-person service. Beneficiaries in some areas must now travel significantly further to access in-person help. Researchers at the Center on Budget and Policy Priorities estimated that staffing changes and new service protocols could force nearly 2 million additional annual trips to SSA field offices for people who previously could handle their needs by phone. A Democratic Senate investigation also alleged that wait times on the SSA's National 800 number were far longer than publicly reported, a claim the SSI's leadership disputed with Commissioner Frank Bisignano, stating the agency is committed to improving customer service and aiming to reduce average call wait times to 12 minutes by September 2026. The most consequential operational change you need to know about right now involves direct deposit updates. Previously, beneficiaries could change their bank account information over the phone. That option has been eliminated. As of now, if you need to update your direct deposit information, you must either complete a multi-step online identity verification through your My Social Security account at ssa.gov or visit a field office in person. This is a real meaningful change. If you are someone who is not comfortable with online systems, or if you live far from an SSA field office, this is something you need to plan for proactively, not after there is a problem. So, what should you actually do right now? Let me give you a clear set of actions you can take immediately. First, log into or create your My Social Security account at ssa.gov/myaccount. This is the SSA's secure online portal, and it allows you to check your benefit amount, verify your direct deposit information, view your earnings history, download tax forms, and manage many aspects of your account without needing to call or visit an office. If you have never set this up, I strongly encourage you to do it today. Second, if you are a public sector retiree or the spouse of one, visit ssa.gov and navigate directly to the Social Security Fairness Act page to check your status and understand your eligibility. Third, if you need to update your banking information, do it through the online portal with the multi-factor verification, or schedule an in-person appointment through the SSA's office locator. Again, ssa.gov. Fourth, if you are still working and collecting benefits before your full retirement age, check your earnings against the 2026 thresholds. $24,280 if you will not reach FRA this year, $65.60 if you will reach FRA in 2026, and plan accordingly. Fifth, if you are nearing retirement and deciding when to claim, use the SSA's online retirement estimator to model different claiming ages and their impact on your monthly benefit. That tool is available at ssa.gov and it is free. There is also a new tax benefit worth noting for those 65 and older. The IRS confirmed that for tax years 2025 through 2028, eligible taxpayers age 65 or older may claim an additional $6,000 deduction per person, $12,000 for eligible married couples filing jointly. In addition to the existing additional standard deduction for seniors, this provision was part of recent tax legislation and could meaningfully reduce the federal income tax burden on your Social Security and other retirement income. As always, consult with a tax professional for advice specific to your situation, but it is worth knowing this exists and asking your accountant or tax preparer about it. Now, let me give you the full picture on your May 2026 payment schedule because this directly affects a lot of you today. The SSA staggers Social Security payments throughout the month based on birth date and enrollment history. If you began receiving retirement, spousal, or survivor benefits before May 1997, or if you receive both Social Security and supplemental security income, your payment date is the first of the month. So today, May 1st, 2026, payments went out to that group. For all other retirement beneficiaries, payments are distributed on the second, third, and fourth Wednesdays of the month based on your birth date. Those with birthdays between the 1st and 10th receive their check on May 14th. Those with birthdays between the 11th and 20th receive theirs on May 21st. And those with birthdays between the 21st and 31st receive their payment on May 28th. SSI payments for May 2026 were distributed on May 1st as well. If a payment does not arrive as scheduled, the SSA recommends waiting up to 3 additional business days before contacting them as banking and mail processing can add delay. One final but important point before I wrap up. If you are still working and paying into Social Security, the taxable wage cap for 2026 increased to $184,500, up from $176,100 in 2025. If you earn below that amount, this does not change anything about your paycheck. But if you are a higher earner, a bit more of your wages will be subject to the 6.2% Social Security payroll tax this year. This adjustment is indexed to inflation and raises revenue for the program without changing the benefit formula for the vast majority of workers. Before I close, I want to be very clear about something. Everything I have shared in this video is drawn from official sources, the Social Security Administration's published guidance, the SSA's COLA fact sheets, the SSA's Social Security Fairness Act implementation page, reporting from outlets including Newsweek, CNBC, AARP, Government Executive, and Rolling Out. But Social Security and benefits policy can change quickly, and what is accurate as of today may look different in weeks or months. Please do not rely solely on any single video, including this one, as your source of truth for decisions that affect your income and retirement. Visit ssa.gov directly. If your situation is complex, if you are a public sector retiree, if you are weighing when to claim, if you are navigating survivor or spousal benefits, please consult with a qualified Social Security attorney or a certified financial planner who specializes in retirement income. The stakes are simply too high to guess. This content is provided for informational purposes only and does not constitute legal or financial advice. Policy changes can occur. Always verify information with official sources such as the Social Security Administration at ssa.gov, the IRS at irs.gov, and where applicable, Medicare at medicare.gov. Now here at US Updates Hub, our mission has always been to bring you clear, accurate, trustworthy information about the policies and programs that shape your life in this country. Whether you are a longtime citizen, a new arrival working toward retirement, or someone supporting an elderly parent navigating these systems, you deserve honest reporting with no sensationalism and no agenda. That is what we are here to do every single video. If today's coverage was helpful to you, please do one simple thing. Hit that subscribe button right now. Every week we break down the policies and updates that matter most in plain language that everyone can understand. If this video saved you confusion or helped you take action, share it with a friend, a family member, a neighbor who needs to hear it, and check the description below this video. I have included links to the official SSA resources mentioned today, so you can go directly to the source. You have worked hard. You have paid into this system. You deserve to understand it completely and to receive every dollar you have earned. I will be back very soon with our next update. Take care of yourselves. Take care of each other.